Hello, good people. Samuel speaking right here. So, guys, we're going to look at the signals that were provided into my VIP group today. So, first signal was GBP JPY for a buy. Second one was for AUD JPY, a buy as well. And the last one was Euro NZD for a sell. So we are going to just focus on the technicals today. So focusing on the price action. So let's start with the euro. Let's see. Okay, let's start with the euro AUD. So euro AUD, going to look at the market from the bigger picture, guys. So we're going to, in this case, we're going to focus on the daily time frame as our bigger time frame. So daily time frame, as you can see, the market is moving sideways. So we're going to, let's remove everything here. The market is moving sideways, but the current data here, the market is selling. Market even broken this previous low here. So there's a little bit of a bearish market there, although it didn't break this one, and it's not trending as it was trending like this. Okay, so this was a clear downtrend, but here is just the start of a downtrend. So once it breaks this, once it breaks below, then we're gonna be trending all the way to this low here. So for now, we are just trending inside the consolidation. Okay, so let's just remove everything. So for now, we are trending inside. Okay, we're trending to the downside. Possibly the market is going to bounce at this support and trend to the upside, bounce at the resistance and trend to the downside. Okay, so that's how you identify a ranging market. The market, it makes trending market inside a range. Okay, let's move to the 4 hour. So a 4 hour time frame, we see a bearish structure. The market is making a low, a high, which is a pullback, and a new low, a pullback, another new low. And then the market here, it made what? It broken above. Okay, it broken above this high here, which was a liquidity grab here. So the market, it grabbed stop losses for people who were selling, who thought this is going to continue selling. Just grab the stop losses here above this high for people who had stop losses somewhere here, and then it started dropping. So that is another sign for a bearish. The market is going to grab someone else's stop loss here, and then it drops. Okay, so going to mark that our liquidity grab here, right here. And then because we know that the overall structure is a sell, okay, we are just going to ignore this liquidity grab. We're going to react after it. Okay, so as long as the market is making something like this, okay, so if it breaks above and come back inside, we consider a continuation of a sell. The market is still trending to the downwards. Okay, so let's remove everything there. So as the market broken the previous low, broken this low, making a new low, came to retest, grabbing stop losses above, and then continuing showing signs of breaking this low, because now we are targeting this low. We are hoping that the market is going to continue making a break of structure as it did here, broken the structure. It did here, broken the previous structure. It did probably is going to do it again here. It's going to break this low. So our main target is going to be at this low as we are holding cells there. So let us now we need to zoom in. We need to zoom in on what is happening here in this leg. So moving on to H1. So H1, what did we see? We saw another confirmation. The market created a retail trading formation, which is a double top formation. And then from there, it broken the neckline. So our neckline is here. The neckline of this double top is here. Okay. So, and a neckline, if you have something like this, then the market drops. Okay. Then the neckline is this previous small support. So we draw a line like this. So once the market breaks like this, okay, once it breaks below it, we consider this line as our neckline. Okay, and then from there we're gonna be looking for selling markets. So from for example, in this case here, made this high and then broken below this. So we consider that as a break of the neckline. So from there, we're going to look at the smaller time frame and look for trade opportunities now, because everything is showing us that the market is willing to sell. Okay, from the higher time frame, which is our daily time frame, we are coming from the highs and we are going to the lows. Okay, so we are coming from these highs, we are going to these lows. Okay, this is going to be a danger zone, which is going to be main take profit for big players. Okay, so that is a confirmation number one. We are coming from these highs, we are going to these lows. Confirmation number two is on the smaller time frame, which is our 4 hour, is that the market is making a clear downtrend with break of structure. It's breaking the previous structure, previous structure, previous structure. So confirmation number three is that the market created this double top formation and it broken below the neckline, which is this. Okay, that was that confirmation. Then now we need to see entry confirmations. Okay, so the market created now a downtrend pullback, a break of structure, breaking this previous low, pullback. I missed the entry here. I remember this, it happened, I think it was approaching the New York session. Okay, this order block here. And the market created a new trending market to the downside, breaking the previous structure. And then I was also looking at the fib level, which is our 61.8 fib zone, which is our sniper entry approach. This here. I missed that entry today. But as the market is trending to the downside, making another break of structure here, breaking the structure, broken, then came to retest. So if you look at this retest, it's coming to our entry zone, which is our 61.8 fib retracement zone. Okay. So we've entered, I think I've entered somewhere here. The stop loss just above. So TP1 is hit. So TP1 is hit with 1.5 R, but possibly we are going to see the market going all the way down to these lows. Okay, all the way down to this consolidation here, because the overall direction on the 4 hour is a sell. Okay, and probably the market is going to break this low, breaking it, and then reaching the overall TP finally. Okay, so I'm going to update my subscribers here, because this is a trade that we took today. This is a trade that we took, and as we speak, the market is really pushing towards our direction over there. So TP1 is here, and then final TP I think is going to be here, which is 2.8 R. Okay, so another signal. Okay, let's check. The signal was AUDJPY. So let's talk about that one. AUDJPY for today, and the market is still blasting to the upside. So we are going to break everything down here. We're going to start on the very big time frame on this one. You can even start on the monthly time frame. Okay. So monthly time frame, I see a ranging markets. In most cases, when you open monthly time frame or even weekly time frame, most cases you are going to see a consolidation. Okay. So I see the market is approaching this high. Okay. The market is approaching this high. Now we are going to look at the weekly time frame. So if we look at the weekly, I see another consolidation here. But if you look at the recent data here, the market is starting to break outside of this consolidation. So we are going to put a line there, put a line like this, because the market is now breaking it. Okay. But probably it's going to break and then come back to retest it and then continue. Or sometimes it can act as if it's breaking and then go inside, grabbing stop losses for people who sold here, because there are people who are selling there. They are selling because of they see a double top. Okay, double top. So market is always going to hunt stop losses, because at the end of the day, big players are going to they want to make money out of us. Okay, so they are going to push the market to the upside and then bring it down quickly. But if there is a real breakout here, market is going to break and then make a pullback that is choppy, meaning it's in a form of a consolidation, but in a downward form. Okay, in a downward direction. And then from there it can break with momentum candlesticks. Okay, momentum candlesticks are candlesticks that have like a big movement in a very short period of time. Candlesticks like this one here, this is a very big candlestick, and this one also, this one also, this one also for a sell. So they can just push it up with big candlesticks, okay, just to show us that this breakout here is not a fake breakout, it's a real breakout. Okay, so now let's move to daily, because on the daily I do see a little bit a short-term buys, which is going to, okay, my take profit for that buy is going to be at this high. Okay, so but if you look at the breakout here, market made a first push from this low, pushed, and then it bounced at the strong resistance, came back down, pushed again, breaking out of this resistance, and then came back down, and then break again, broken what? It broken this previous high now. That is a confirmation that the market is really interested to go up. Okay. So, and remember that whenever you see an impulsive move, a push like this, expect a pullback. A push, you must expect a pullback. Then a push, expect a pullback. So now we're going to look at the 4 hour. 4 hour we did, yes, to get a pullback like this. And then now the market is printing uh uptrend, uptrend candlesticks. So if we zoom inside here, we're going to see a clear uptrend like this. Okay, if you go to the smaller time frame. Okay, so we are going to go there, but let's mark this previous demand zone here. So this was another interesting area of This is our area of interest. The market came into this demand zone and then started to push to the upside. Okay, so this is acting like a support. Okay, it's supporting our our buying candlesticks there. Okay, so now as we got a strong demand here, strong demand, and we got the market shifted a direction, then that gives us now another confirmation to start looking for buys. Okay, so we got a reaction here, double bottom, and then we had a neckline here, a neckline, and then a market broken outside of the neckline, came to retest, and then started to buy. Okay, started to buy, and that's when I given out the first signal of a DJPY for a buy like this after I've seen a strong candlesticks momentum candlestick, okay, which is this one here. Okay, let's put these lines like this. So my first entry is this one. Enter there, stop loss below the wick. Okay, and we are in profit as we speak. And then the second entry, okay, let's remove this first entry because the second entry was a sniper entry. So the market, it made this momentum candlestick and it made a new high and then came to retest. So I was looking at this retest, and then I had a demand zone, which is our area of interest. So a strong push and then a pullback. So this push here was very, very strong because it also broken this previous high. And then while I was waiting for a pullback, I knew that once the market comes into our demand zone and starting to print buying candlestick, it's possible that the market is going to break this high now. Okay, this high. So the market has a high possibility of breaking this high, making a new high, and then pull back and then making another new high. So that was my second entry right here. Second entry right there. Stop loss below the demand zone, below this zone. So I'm going to show you also my TPs. Okay. So first TP here, I'm going to look left. I'm going to look left. If you look here, this is an area of imbalance. Okay. There was news during this move. It went down so quickly. So whenever you see a movement like this, you must know that the market has a high possibility of going inside that move just to fill up that imbalance. So in this case, because the market is trying now to go inside this move to fill up this all of this imbalance, so my target is going to be here. It's going to be at the beginning of the movement. Okay, so my TP is going to be there, but I can close some of my profit here. Okay, so let's look at the previous move. It moved how many pips? 50 pips. So I'm also going to target 50 pips for TP1, which is here. And then TP2 is going to be at this beginning of this imbalance here. So that's how, guys, I break down the market. That's how I enter. So let's look at another one, GBP JPY, which is this one. But I deleted this pending order here. This was a buy limit. Then I said delete that buy limit and then place a GBP JPY buy. Okay. Because this one it didn't get triggered. Okay, this one didn't get triggered, and then I've given another one. So let's look at GBP JPY trade. Okay, also in profit. So I'm going to remove everything here, guys, and drop and break the market for you live. We're going to start on the monthly because we are approaching these highs, guys. We are approaching these highs. This one is similar to AUDJPY. Okay. So we're approaching these highs, which are, it's going to be a very sensitive zone. Okay. So let's move to weekly time frame. So weekly time frame, if you look at the current data, zoom in a bit. Current data, we saw the market making some sort of a ranging market here, and then it broken above, came to retest, broken once again. So we're going to put a line here, put a line where the market broken. So it broken right here, broken, came to retest, and then made a continuation. So let's move to daily. So daily is very, very clear. We can even draw trend lines like this. The market is making clear uptrend, you know, clear uptrend. So as we speak, the market is in this uptrend, which is a minor uptrend because we didn't break this high. But it's possible that we are going to break those highs because we've been breaking the highs. Okay, we've broken this high, we've broken this high. So we're going to remove everything. So here we've broken the previous high. Okay, broken the previous high, broken the previous high. That means it's very, very possible, guys, to see the market breaking this high. So there's going to be my first target here for short-term buys. Okay, it's going to be my first target, and then second target is going to be above that high. Okay, so let's remove this and then go to 4 hour. Okay, so if we look at the 4 hour, okay, let's go back to the daily. There's something that I missed. Okay, so if you look at the swings from swing low to swing high, and then a pullback, swing low to swing high, and then a pullback. So if you take your Fibonacci and then draw it from the bottom to the high, and look at the 61.8 Fib level, and see how accurate it is if you wanted to enter here with a sniper entry at the 61.8. But because I missed that entry, then now I'm going to go to 4 hour time frame and start to look for an uptrend that is within a daily time frame uptrend. So as I've missed the sniper entry here, then I wanted to see the market making a new high, now, breaking the previous high, then come back. And then if I get something like that, then I wanted to say to see the market reacting at the 61.8 Fib level. Then I draw my Fibonacci from the first swing to the second swing and look for the entry at the 61.8. Okay, that's what I do, guys, and that's when I given out a buy limit here. But the buy limit market didn't trigger. Okay, I think I've given a buy limit here, and then the market didn't trigger, and it also reacted at the 61.8. Okay, so if we look from this low to this high, where is the 61.8? Right here. That's when I missed the entry. Then I also went down to the 1 hour. Then same thing. I wanted to see the market making a new high, pullback, continuation. So how do I enter? I use the 16.8 Fib retracement tool. Then I draw it from swing low to swing high. And that's when I entered, guys. I've entered here. Stop loss is right here. So take profit 1 for people who are in my group here. If you are happy with 1:1 R, if you are happy with 1:1 risk to reward, then your first take profit is supposed to be somewhere here. Okay, now we are approaching your first take profit, and then a take profit 2 is here. Okay, so if you see that, okay, whenever you take 1:1 R, you win more trades, then we are happy with that. Then you can take this profit right here. Okay, and the reason why I'm saying that is because whenever you use my signals, 1:1 risk to reward is going to give you almost like 80% win rate. Okay, because whenever we enter, the market goes into our favor, but it can retrace along the way. Okay, it can retrace maybe like this and then go up again, or sometimes it can go inside, give you a 1:1 risk reward, and then go down and hit your stop loss, as it did on US oil trade. Okay, but US oil, okay, we've entered here, market gave us 1:1, and then decided to go down. So now it's still fluctuating in a loss. Okay, so another trade that we took on Monday, Tuesday, I think it was Euro JPY. Yeah, we've got like 1:2. I think we've entered somewhere here. Stop loss was here. We've got 1:1, and then from there the market collapsed. Okay, so 1:1 is going to give you like 80% win rate. 1:2 is going to give you like 75% win rate, and 1:3 and above can give you like 60% win rate. Okay, so that is totally up to you on when you decide to close your profit. Okay, so guys, I'm done for this video. Thanks for watching. Cheers.